You need three things to be a profitable scalp trader. Scalp trading means that you are holding the positions for short term, not long term like days and weeks and whatever, but you may be holding it for a minute or an hour, or you literally go to the market to make money and you are just out. Three things: one, understanding probabilities and risk management; two, understanding market structures; and three, understanding what liquidity is. I'm going to explain to you what these things are and why they matter and how you can actually identify them and use them. And also I'm going to give you my trading strategy, my scalping strategy that prints money every single day. And I'm not here to sell you a course. I'm not here to sell you a membership. I'm just sharing with you my thoughts, my opinions, as I do on X as well. If you don't know who I am, my name is Fefe. I'm a trader, I'm an educator, and I'm a show host as well over at Crypto Live and 100X Club. There's a link in the description to all my X and all the shows that I do every single day. I have this slot on the weekend here in Banter, and I'm coming here to give you my thoughts and my knowledge so you can navigate the market better. This is this week's performance. I gave all these trades on my live shows and on X. It's not only me making money, but actually a lot of people do make money from my calls and on X as well, completely for free. So if that sounds good, again, stick around for the show. Make sure to go down to the description and check out my X. Follow me there, and also come to the daily live shows. Now, very important, the difference between scalp trading and normal trading or you know, other type of tradings, is swing trading, for example, is that in scalp tradings, you literally just come to the market, you wait for an opportunity. When an opportunity shows itself, you get in, you get out. You make money. You usually use higher leverage because of the smaller moves you have. So for example, there is like a 0.5% stop loss. On a 10x leverage, that's only a 5% stop loss. So you would use a 10, 15, 20x leverage and maybe catch 1% move, 2% move for a 20, 30% profit on the position. But the reason why I love scalping, and the only reason why you can only scalp in this market, no matter who says what, is because the market is uncertain. And the best thing to do when the market is uncertain and when there is no clear direction is scalping. And I've been telling you about how I've been accumulating on 3x leverage. I've been telling you at 106,000, 104,000 that I'm shorting and I'm selling everything. And I'm telling you that it is not the time to start loading up and buy and long. It is the time to scalp. Come to the market, take whatever you can, and come back tomorrow as well. So what I said, this scalping strategy is very, very simple. So one thing you have to understand, and I tweeted about it, 𝗙𝗘𝗙𝗙𝗪 said it very nicely, is that 2025 will be the traders' paradise and investors' hell. Why? Because when you come to the market with the mindset of, I'm going to get into this position and I'm going to hold it for 3 days, you're going to get smacked because Trump is going to, sneeze and your position is going to get liquidated. So you want to make sure that you don't load up and if you're an investor, cool, buy spot, always buy Bitcoin, it's great. But if you want to make money, you want to accumulate dollars because you have to pay, food, then scalping is the way to go on the current market conditions. So, three things to understand. One is risk management and probabilities. When you're scalping, a lot of times what happens is that you get stopped quite a lot of times because you take a lot of darts. Imagine it as this. When you have 10 shots or 20 shots to take in a dart, for example, or you have 20 opportunities to kick the ball into the goal, right? You can take all those 20. You not necessarily will sit around in the first one and just wait and whatever. You're going to experiment. You're going to kick one and you're going to, okay, I should go a little bit right. And then you're going to kick another one, because you've got 20 shots. And you know that at least 50 or 60% of them will go in. Now, whereas if you have only 1 or 2 shots, then you're going to sit around and think about it and wait a lot, and you're going to wait for the right wind and whatever. You're going to just, right? So it's very similar with swing trading and scalp trading. And scalp trading, you get a lot of opportunities. You maybe get, 2, 3, 4 opportunities a day on different pairs, but on swing trading, you might get these bigger opportunities on higher time frames once, twice, 3 times a month. So because you get more opportunities, you will miss more opportunities or you will get stopped on more opportunities. That means that because it's on a lower time frame, you use the 1 minute, 3 minute, 5 minute time frame, maybe the 15-minute time frame, you are going to get stopped much more often because it's not as simple to read the market on the lower time frame. So, but that understanding that, it's very important to know that it's just a business expense that you're paying. A stop loss is not a bad thing. It's perceived in the industry as like, oh my God, I got stopped, you fucking idiot. But that's not what it is. It's just a business expense. If you have an office that you're renting and you're still making money, you're not saying, oh my God, you're paying for an office, what a loss. No, it's just a business expense. So you have to understand your probabilities of your strategy. I'm not going to talk about strategy. I'm going to share with you my strategy, but I'm going to talk about other strategies in this video. But you have to understand your strategy. You have to backtest your strategy. You have to understand how many times you win. And based on that, you have to calculate your risk reward. I have a video down there. We're going to link it in the description as well. I have a bunch of tutorials. And also, it's worth checking out the 100x Club. It's my trading channel. There's a link in the description. It says Fefe socials. Go on X. Follow me on X. It's definitely worth checking that out. I share a lot of knowledge here. But also on the trading channel, I am over there. But that said, when you understand your probability and you understand you can get stopped multiple times and stop loss is not a problem, but it's actually a business expense, you can move on to understanding two major things. One is market structure. Now, market structure is super simple. People complicate it and it's difficult to notice at first, and you will have some time to learn it, but in general, it's very simple. Market structure means that you can have two main ways, right? Market only goes up or down. And even if when it consolidates in a range. So you can call that a third one. But one is market structure. Market structure means you have either you're forming higher lows because this low is higher than the previous low, and this low is higher than the previous low, higher lows and higher highs because this high is higher than the previous high, and then this high is higher than the previous high. So higher highs, higher lows. It's an uptrending market. You can do lower lows and lower highs. A lower low is lower than the previous low, and the high is lower than the previous high. Therefore, you're forming lower lows, lower highs. That's a downtrending market. And then, as I said, you can also look at it and be like, okay, there are ranging markets, but usually what happens is that a ranging market does this. So that's actually a ranging market, but it's a ranging market in a different trend. Because on a higher time frame, this is still a downtrend. This is still a high, this is still a low, this is still a lower high, and at some point this is going to form a lower low, most likely, or just reverse from here. So consolidation, yes, you can say it's a trending market, or is it? It's a sideways market, but a sideways market is within a higher time frame trend, whether that's bullish or bearish. Okay. So it's very important to understand this. Now, once you understood market structure, meaning higher high, higher low, or lower low, lower low, higher high, higher low, lower high. Once you understood this, you understand that happens on every single time frame. That happens on the hourly, on the 15-minute, on the 1 minute. If I actually just zoom in here and I go onto the 3-minute chart, you will see that it happens here. Look. So on this way, the trend is, think short term. The trend here is up. Why? You had a high. You had a low, right? You had a low, you had a high, this is a lower high, then you had a lower low, and then suddenly you have a shift here and you have a higher high. Then you have a higher low. Then you have a higher high. Then you have a higher low. And then at some point you go, oh, holy crap, now we have a lower high. Okay, cool. And then you have a lower low, and so on. So you have to identify the trend on the lower time frame to understand where the trend is going. Now, ultimately, when you do scalp trading, what you want to do, you want to go onto and it's daily strategy, like forget everything, forget where the market goes, forget everything. You go into the hourly charts and you look at the market structure. The market structure can be something like this, right? Something like this. If you come on the day and you be like, okay, so what is the higher time frame? And higher time frame here is the 1 hour. Remember that. What is the higher time frame structure? The higher time frame structure is up. Why? Because we have a low, we have a high, we have a low, we have a high. This is an uptrending market. Good. Ultimately, my thinking is that, or my thesis is that until the market breaks below this low and creates a lower low, the market is going to create a higher high because that's just what it does. Higher high, higher high, higher high. That means I only take long positions. Listen carefully here. Listen carefully here. I only take long positions. So when the structure is bullish on the hourly chart, I only look for long positions. Why? Because when I go down onto the 15-minute chart, the same thing here, right? So this here, what you see here, this retrace is going to look something like this on the 15-minute chart. Something like this, right? Because I know this here, this thing here looks like this, right? When the market is coming down on the hourly chart, it looks like a big candle, but on the 15-minute or the 5-minute or 1 minute, it looks like lower lows and lower highs. And so, because you know the market will reverse at some point before breaking below a major level, you need to look for a reversal. Okay. Now, reversal is a very, very freaking simple thing to look at. Why is this not doing what I want it to do? Very simple concept. Reversal is the following. You need to see a higher high on the lower time frame. Simple. A higher high. Once a higher high happens, so this is market structure, by the way. This is market structure. Once the higher high happens, you shift a trend. It's called a market structure shift. A lot of people ask me what a market structure shift or MSS is. This is what it is. It's a market structure shift because the structure of the market, which is lower lows, has shifted. Or when it's a higher highs and it makes a low, this is a market structure shift because the trend shifted. So the structure of the market, higher high, higher low, has shifted. So when you understand this, and I know it's a lot of information, by the way, for all of you who are new and whatever, this is why I always urge you to follow me everywhere you can, because I genuinely help you navigate the market. Again, make sure to follow me on X. I post educational stuff there, a lot of explanation, charts like this that help you understand summaries from the show, much more, very simply understandable charts. So go and follow me on X. But also there is a link to the 100X Club, which is my trading channel, which I give you trading education like this. There's a link in the description. Go and check that out as well. And of course, I'm going to bring you a bunch of cool stuff here on the weekend. So, but you already subscribed. I'm pretty confident. So let's get back here. When you have this, when this is the market structure, now you understood this, you're looking for a reversal. The third thing that you want to see is liquidity. Now, so many people get this wrong, okay? You can look at liquidity heat maps and people come to me and they're like, oh, this liquidity heat map and that cool, that can be spoofed. That means that people pretend they put an order there. When the market gets there, they take their order and market goes up. It's complete nonsense, okay? So what I want you to focus on is very simply, it's gonna be a simplified version, but it's very, very, very simple. What is really liquidity? Liquidity is limit orders. So when the market structure goes like this, what do people do? They short. So where do they put their stop losses? On the major levels. I mean, if you have a market like this, you put your stop loss, if you know anything, or you're just a retail or whatever, you put above the trend line or whatever you want to call it. But the market makers know this. So you have three types of liquidity, two main that you use. One is relative equal highs, relative equal lows. You call these double tops, but they are not. I'll explain the difference. Relative equal highs, relative equal lows. That's one. Trend line liquidity. And then which can be like this. And then liquidity, session liquidity or liquidity inducement, which means, let's not go into it, but you can go into 𝗏𝗏𝗏𝗏. It's a simple free indicator that is not even mine. It's just Lux. It's called 𝗏𝗏𝗏𝗏 session indicator. And then it shows you the sessions, and every session low and every session high is liquidity as well. As you see, New York taken dump, Asia taken pump, Asia taken dump. Here on New York Open, it starts retracing but can't take it. You know, so it's just like here, London Open, New York takes it dump. So it's like it's also session liquidity, but don't worry about this for now. So when you understand liquidity, double top, everything where you see. So for example, a very, very, very good example this here. A very good example was this here. Look, so this is liquidity. This here is liquidities. You can call these double tops, or this one here. You can call these double tops as well. Or you can look at this as double tops. Relative equal highs, relative equal lows, okay? Then you have trend line liquidity. Trend line liquidity means this, it's a trend line. So you can say this is a trend line liquidity. This is trend line. Or you can say this is a massive trend line liquidity. Or if you want to go into the daily on Bitcoin, you can look at this. I've been telling you this when this was happening, and when we broke above, we went long. I literally went long here. Why? Because the trend line liquidity gets taken and it starts taking it. When you make a new high here, and the trend line liquidity starts taken, then you have a big move. I didn't want to talk about this, but I have to because now I mentioned, so just 2 seconds. So it's very simple. Market structure, high, low, high, low, high, low, high, low. This is the new high. It needs to be broken. High gets broken. You know there is liquidity. What do? You get into a position. This is exactly how scalping works as well, but this is the daily time frame. So let's go into let's go back to the 5-minute chart and let me recap. So if you go into the hourly, how could I take all these trades? So how did I know this is happening? How could we take all these 100% trades, and why? How do I analyze the market on a scalp? It's very simple. You go here and you see what is the market doing. It's retracing. What am I interested in? Shorts. I'm not interested in longs. This is what I said, right? What does the market do? Low, high, low, high, low, low, high. It's making lower lows, lower highs. It's coming down. Okay, it's building up liquidity. It will pump like crazy at some point. Not now. So what do? I go into this is the hourly chart. I know I'm looking for short positions. Shorts. I'm not looking for longs. I'm looking for short positions. I go into the 15-minute chart. I see if I see any structure here. Any structure. I want to go back here. I don't see because it didn't play out yet. But if you go here, it's very clear here, for example, that you do have a structure. You go down to the 5-minute as well. You can look for a structure. What is the structure? Where you have a high here, you have a low here, you have a bounce here, right? A little bit of bounce, impulsiveness. You have a new low here, you have a bounce here, you have a new low here. What happens is that you get a retrace. You get this. If you want to, it's the next level of scalping, but if you would want to, you could play on liquidity because you see a clear liquidity, trend line liquidity here. That means there will be a pump. If you see a market structure shift to higher high, you could long here, but I just want you to trade with the trend. The trend is your friend. So as a starter, don't do this, but trade with the trend. So when you know that there is a market structure shift happening, but you overall on the hourly, you're bearish. You're bearish because we've seen that it's going down. If you see that there is a higher high, you know that it's not something too long. It's something to pay attention to because the retrace started on that move. Remember, on a higher time frame, it needs to make a new lower high because this is what the market does. It just makes a new lower high and then it continues lower and lower high and it continues lower. You understand this now. So you know that on the hourly, this started the lower high. What do you need? You need to identify major levels like this, where you had a little bit of pullback, or this, where you had another pullback. And when the price, and listen to me here carefully, when the price gets back to any of these levels and makes a market structure shift on the lower time frame, whether that's the 5 minutes, whether that's the 3 minutes, depending on what you want to trade, the lower you go, the more you're going to get stubbed. It's not a problem, it's just mentally draining. The more lower the time frame you go, the more you're going to get stubbed. But the 5 minutes is perfect. If you go down here and you want to identify like a proper level for a short in a rejection area, in an area where there was another, this can be also one. So if we came back here and we made a lower low, I would have shorted here, but we didn't. We broke above and I'm like, okay, so on the lower time frame, we are bullish. It's fine. We could have long this. I actually long this, but again, this next phase of scalping, I'll teach you all that on the 100x club and on X. But for now, what you want to know is that when you get into a rejection zone like this, you want to look for a market structure shift. You get one here. You see it's clear. It closes above there, and then it closes below the level. Good, perfect. But you can also just take, at least if it's difficult for you to see this, you can take 3 consecutive candles to the opposite direction. So here, it's only 2 bearish candles, 2 bearish candles. So this is the first time when you have 3. So you could take this level. I wouldn't do it because I just see that this is a rejection here. You have a close above, you have a close below. Retest, it was a perfect short. I shared this on the live, by the way. You can look back on the shows. But you can take this level, and then when you see a break and close below, you take a short. And you use the recent high, or you can use the high of the rejection zone, that area where it rejected. Now you see this is like 0.5%. So even if I go 10x, it's like only 5%. And you can go to 1 to 1, you can go to 1 to 2. And the beauty of this is you get out. I tweeted about this actually, and I gave all these trades to you. And I tweeted about it and I said, close 50% of my shorts. And then people are like, why? Why would you close? Aren't we going lower? Yes, we are. On the higher time frame, meaning the hourly chart, we are going lower. But I took a scalp position, and this is what I explained here. I took a scalp position. So many uncertainties, massive liquidity built on top. We can pump, and I said pump, but that's not good. Pump. Leaving so much money on the table because I think I'm right is stupid. So you just gotta take it as it is. I would have gotten out of this. That's it. Done. It's done. Done. What do? Comes the next day. Okay, what does the next day bring? I come in here. This is the next day, right? I took this scalp, whatever. I look at it on the hourly chart. And I go, okay, so what am I looking at here? Well, it's pumping, but what does it really do? Well, it's building up liquidity, for one, right? Because I told you what? Trendline liquidity. Look at this. It's building up liquidity. Okay, cool. So this pump doesn't matter. It came back to a higher time frame rejection here. It's 15 minutes. Okay, so I go down to 5 minutes. If I see a 5-minute market structure shift, which is, again, a wick or a close below, I will short. Okay, so what's the structure here? Well, I have a low, I have a high, I have a low, I have a high because this closes above there. I have a low. Okay, cool. I was expecting another high. We're going to break through. Oh, no, we didn't. Okay, why? Because here we close below. Cool. I take a short. I take a short here. I put my stop loss up here. That's it. Simple. 1 to 2 risk reward. Next day you wake up. What do you do? Well, here, what do you do? Well, you're waiting. For what? Next phase, I will actually long this because I know that it can come and I can get stopped. It's fine. But the next phase is that you understand liquidity, builds up liquidity, look at this massive liquidity, you can start taking it. So, but in general, what you want to do is you wait for a retrace because on the hourly, this is bearish AF. You wait for a retrace. And when it gets to rejection areas, currently it's like this and this and this. If you see a 5-minute market structure shift to lower low here, you short. And if you want to practice your trading, you can also do that on 𝗏𝗏𝗡 as a demo account. So 𝗏𝗏𝗡 is a non-KYC available worldwide exchange. I love 𝗏𝗏𝗡. I use 𝗏𝗏𝗡. I know the guys as well. And for those of you who are afraid of like trading and testing and experimenting, and you know what, just go here, just click on futures, go on, it's not here now, but you can go on futures. Yeah, because I'm already in the demo, but let me just go here, futures. I'm already in the demo. Why is it not allowing me to take this out? I'm already in the demo account. Oh, it says live trading here. Okay, sorry, that's why. Okay, cool. So you can go here, demo trading, and then you will be able to see this, and then you can just start experimenting with it. There's a link in the description. The best part is if you trade on my link using the description in the link in the description, and you trade at least 1 million trading volume, you have a chance of winning a 30-minute consultation with me every single month. So it's actually quite cool. You want to do that. Guys, truly appreciate you. I hope that this helped you in any way. If it did, let me know in a comment. If you have any questions, do ask along in the comment section. I am going to reply to you. I urge you to go and follow me on X. You can also, when you go into, there's a link in the description, you go into my X, and then you can just click here onto the link tree and you will see everything. I have a vlog, I have a trading channel called the 100X Club, and then I'm always live on Crypto Live every single day, so you can do that as well. Guys, I truly appreciate you, every single one of you, for being here. I really hope that this helped you. If it did, let me know, and come back for a next one. Thank you so much for watching. Again, appreciate you, and I believe I'll see you in the next one. Take